everyone, welcome to the Japan Market Brief podcast for March 30. Today, we are looking at one of the sharpest down days Japan has seen in recent sessions, why the sell-off accelerated, and why Shizuoka Financial Group is the stock to watch. Today's headline: Japan's market moved decisively lower on March 30. This was not a minor pullback. It was a broad risk-off session shaped by three pressures hitting at the same time: surging oil prices, a yen sliding toward 160 against the dollar, and a sharp rise in long-term Japanese yields. Market moves: the Nikkei 225 closed at 51,055. 55, down 3%. The move reflected a fast deterioration in sentiment around growth, inflation, and policy risk. Dollar-yen moved close to 160, a level that immediately raises intervention sensitivity and fuels concern about imported inflation. At the same time, Japan's 10-year government bond yield briefly rose to 2.39%, its highest level in roughly 27 years. That combination is especially difficult for equities. Higher oil prices threaten profits and household purchasing power. A weaker yen makes imported inflation worse. And higher bond yields tighten financial conditions. Put together, investors start worrying less about a simple growth slowdown and more about a stagflation-like setup. The macro setup: that is why this session felt so heavy. The market was not reacting to one isolated headline. It was reacting to a chain of pressures feeding into each other. The Middle East conflict still looked unlikely to resolve quickly. Oil moved higher. Investors bought dollars. The yen weakened further. Then yields rose as the market started considering whether inflation pressure could force tighter conditions. In that kind of environment, broad equity indices have very little protection. Even if some companies have decent fundamentals, investors still cut risk because the macro backdrop overwhelms stock-specific optimism. Stock to watch: Shizuoka Financial Group. That is exactly why Shizuoka Financial Group is the stock to watch today. NHK reported that Shizuoka FG and Nagoya Bank formally agreed to move ahead with talks on a management integration. If completed, the combined group would hold more than 22 trillion yen in assets and become one of Japan's largest regional banking groups. Why does that matter on a day like this? Because it gives the market a very different kind of story from the names that usually dominate risk-off sessions. This is not an exporter story. It is not a semiconductor restructuring story. And it is not another oil-sensitive industrial name. Instead, it is a domestic financial consolidation story. That matters because regional banks in Japan are facing a more demanding environment. Higher rates may help margins at the margin, but scale, cost efficiency, and geographic reach are becoming more important. In that setting, consolidation is not just defensive, it is strategic. Shizuoka FG therefore gives investors a more durable angle. While the broad market is being pushed around by oil and the yen, bank consolidation reflects an internal restructuring trend that can continue even when the macro backdrop is weak. Why it matters for the market: this makes Shizuoka FG useful because it helps answer a different question from the one the index is asking. The Nikkei is asking whether macro stress will intensify. Shizuoka FG is asking whether investors can still identify domestic sectors that benefit from scale and structural change despite that stress. That does not mean the stock is immune to market weakness. Nothing is immune on a day like this. But it does mean the company is tied to a concrete corporate action story with longer-term implications, and that can matter a lot when the broader market feels indiscriminate. What to watch next going forward? There are three things to watch. First, whether dollar-yen breaks more decisively beyond 160. Second, whether oil prices continue to rise or stabilize. Third, whether bond yields keep moving higher and tighten conditions further for Japanese equities. On the corporate side, investors will watch whether Shizuoka FG's merger talks become a model for further regional bank consolidation. If they do, the banking sector could become one of the few areas where structural change still attracts attention even during a macro sell-off. Closing that is your Japan market brief for March 30. Japan's market was hit hard by oil, FX, and yield stress, but Shizuoka Financial Group stood out as a stock to watch because it ties a defensive sector to one of the clearest domestic restructuring themes now in play.